Okay, so we'll get started now that all that's done and most people are in the room now. Anyone from YouTube or any other channel, just click on subscribe and like, or if you've any comments or any questions, just pop them in the comments and stuff like that, and I will go through them. If you've any stocks or any ETFs or anything for that matter you want me to go through, just say it in the comments below and I will go through it. So we might as well start off with the likes of the Nasdaq. So we've had a pretty good run as of lately. Kevin, can you put your question stuff in the chat box rather than the questions and answers? Answer live. Thanks very much. Yeah, my bad. No, it's fine, cool. It's just that I don't check that, and then the questions end up not being answered. So we have the Nasdaq. Nasdaq is running quite nicely at the moment, and we are in a nice phase one. So this is the momentum of the market going up at the moment. And if we look at this, we can see that's overall trending really, really nicely in that upward trajectory. So we're actually quite happy with this. We're looking at the market continuously going up. So what we have to do now is try to anticipate where the market will come back to, because the market always comes back to a phase two. So if we look at this one, we had a phase two here, continued going, we had a phase two here, continued going, had another phase two, continue went, phase two, and then it actually come back down a little bit deeper. So all we have to do now is try to anticipate where these phase twos will come back. So with everyone here online, where do you think that this phase two will come back to? Where do we expect the floor to be? Now we have to look at it where it is right this second. We can't anticipate it being up here and then come back. We have to anticipate where it is right now. Where do we think, when a phase two happens, where we think the floor will be? So 1550. So I'll pop this up to 1550. Okay. Some people are saying 1520. So I'm assuming people are meaning there. Okay. Anywhere else? 1500. Well, I'm gonna move. Well, I'll leave that one there because that one is so 1500 there as well. Okay, so we have 1, 2, 3 levels. Now this one was already there, so we're going to leave that alone. So we're going to have a look at the 3 levels that we have. Is everyone happy with one of those 3 levels as a minimum? If you're not and you want to put in another level, just let me know and we'll stick one in. But if you're happy with those levels, good, good, good. We have someone who has spotted the level. Right, one there. How many levels did I put in here at this point? Okay, so we have now 1477. There. Okay. Well, there's more than 4 now, isn't there? Well, let's see. I must have pressed that button about 15 times. I'll put that there. Actually put it in a relevant place. So now we can see we have 1, 2, 3, 4, 5, 6, 7 levels. So in anyone's mind, so is there any of these levels that we can look at that are not relevant? Because this is where support and resistance comes in. It's very subjective. It's very where what people's opinions are. So is there any area here that we can say categorically that does not work? So is there any of them here that we can say that no, that one does not? It's definitely not a level. It's definitely not something we should be interested in. Someone says number 3. 1, 2, 3, and we'll start from the top. So if you want to number them there. So someone said number 3, this one. Is that the one you said from the bottom, or 3 from the bottom? Okay, so we'll number them from the top down. So 1, 2, 3. So this one, okay. I would have said number 5. Okay. But I'm looking into levels, tops and bottoms. Okay, so I just mentioned this one. So this one has had 2 touches. So yes, it's relevant. Wayne has mentioned this one. Well, it's had a bounce here and a bounce there. So again, that's relevant. But is there a level in here that has no relevance? There's not bouncing, it's not touching, it's literally chopped through it, gone through it again, and chopped through it again 3 times. Any level there that we can see that's wrong? Absolutely. Number 2. Number 2 from the top. All right, we're going from the top down. So number 2, look at this. Literally goes up through it, comes back down, goes up through it. So number 2 has no levels here. Now, you could argue that, look, it's had 1, 2, 3 touches here and it's touched here. We're looking for clear rejections. So look at this one. It's hit it, come back down, hit it. But this is the one that makes it valid. It's gone away. See this level? It's come down, touch it. It's cleanly going to move away. This one, it's touched it, moved away. This one has come down, touched it, moved away again. This one has gone up and touched it and then gone down. It's gone up, touched it, and then come back down. This one, it's hit its head, move back down, hit its head, move back down. All right, so this is, for me, is the only level here that does not exist. Okay, so that one is the one that we are removing. So we're getting rid of that level. Now we have to sort of look at probability wise. Okay, so now we're going to look into them. Where is the probability of the place that this will come back to? So where's the likelihood? Which one is the most relevant? Which one do we think will be the area that it will come back to? So we can sort of anticipate. So if we get our trend line here, this one. So what's the probability of the market coming down here and then going up? So what's the probability of the market coming down to there and then going up? Would that be high or low? High or low? Okay, so at the moment, we are 70-30 with the lows. There's a couple of people saying 50-50. Okay, well, I understand your 50-50. I understand the 50, but what in your, if you were to get off the fence, would you have said higher or lower? Obviously, we can't guarantee. So this is as us as a guesstimation. Okay, so we're trying to guess which one. So most people have said lower. Now, the probability of that coming back and touching this is quite high. It's extremely high. Extremely high. Pretty sure we will get some sort of rejection on that line. We'll get some sort of rejection on that line, and it will probably be on the smaller time frame. It'll probably be on the smaller time frame. We get a selling day, pops down, and then back up again. So it's extremely high. Now, the problem with this is this, if this happens, is that a good trading setup? So just imagine we today get a big selling bar. So we have the market, and today we have this big, whoop, nope, that's not what I was meant to do. We have a big selling bar. Where's the lines? So we have a big selling bar today, and it has come down, and it's there, and it's sold off. And we have a big selling bar like this today. It's gone down. Is that a good scenario there? Are we now looking to trade at long off that point? I'll actually change that to red just to make it more visual. So if we have the selling day here, and then we have a little wick on the bottom, is that a good place to trade? Are we now looking for this to kick off? So remember, if we're trading this, our entry will be there at the top. Our entry will be above it, and our stop loss will be below. So the entry will be there, and the stop loss will be right there. So entry, stop loss. Would that be a good trade to take? So some people have said yes. Most people have said no. So no, it's not a good trade. Why? There's a couple of reasons. Now, one, we have the overall momentum is going up, but it's been going up for a long time. So see this phase one started here. So started there and it's now there. So we've had a pretty big movements in this direction without a phase two. Secondly, remember I said to you early and late phase one. Okay, there's early phase one. Anywhere between this high, the previous high, to this low is early phase one. This is early phase one. This is late. Okay, we're in late territory. I'm trying to type now. That's supposed to be early. So this is early and this is late. So we're outside this territory. So this is early and this is late. Okay, late and early. So the idea is that I want to make sure that I'm getting in the best probability trade. So this for me is the highest probability of a phase two, this one. Now, this is not a proper phase two. This is called a 1 bar pullback. So that's called a 1 bar pullback. So it's not something that we are massively looking to trade here. Why? Because it's not giving us the best setup. We're not in the best area. Okay, so we're not looking for that massive 1 bar pullback at the moment. So if we're looking to trade this, you will have to drop down to the smaller time frames. Okay, we will not be looking to trade this on the daily chart. We'll look to trade it on the 4 hour if it comes back to here. If it comes back to here. Now, the problem is that if you have a big red bar, like this, how confident are you that the market's going to turn around? So a big red bar on the daily chart, it's come back at this level. How confident are you going to turn around? And the problem is that people then potentially sort of overthink things. You've forgotten that the overall trend is up. So there's a high probability of it turning, and investors are looking to jump in at the same place. So that's the first scenario. There's a high probability of it happening, but it's not the ideal setup. So what we need is a pretty nice pullback. So from there, the next level down is here. Now, if this happens, would we be happier to place a trade here than the one above it, or less happier? More or less at this particular point? Okay, so everyone is much happier if it comes back to there. All right. So what we have to do is we have to sort of work out which one we're going to trade. Now, these other levels, they're even less likely. They're even less likely of happening. Now, the levels are relevant. They're relevant, but they would be the two levels that I would keep an eye on, that I'd be looking to trade. Now, today's bar may even be a big green bar. That'd be lovely, wouldn't it? A nice big green bar. Change that to green. and it takes off like this, and we have a big green bar today. That'd be better. That'd be the best case scenario. That'd be exactly what we're looking for. And then it means that this becomes null and void, because then we're looking for a pullback into that area. So then we're looking for a pullback into that area. So that would be the best case scenario. But just imagine today is not. Just imagine today turns out to be a selling day, and this could be the beginning of a phase two, because we're waiting for a phase two to happen, because we are now a little bit overextended. We're gone past that high. And once we go past that high, we are always in territory where phase twos can happen. And we have to make sure whether it's plan A or plan B. So we have to have two scenarios for this. And let's see which one plays out. Now, if this one plays out down to here, we then drop to the smaller time frame and potentially trade that. If it comes back down to here, we're looking to trade this on a daily chart, and it would be a really nice entry to get in long term. Okay, this one would be a short term trade. This one would be a long term trade. And we're just going to do the same on the S&P and the Dow, because just because we're on the Nasdaq doesn't necessarily mean that we're going to take the Nasdaq. We want to make sure the Nasdaq, S&P, and the Dow, we're going to pick one of them. Okay, so we're going to pick one of them. Now, looking at this one, levels seem to be a little clearer on this one, don't they? So I have one there. I have one there. If I get some horizontal levels here, obviously one goes right there at the top, and then there's another one there. So there are the levels on the likes of the S&P. Now, if we get a 1 bar pullback in the S&P, actually, I'll put it on it here. So if we get a 1 bar pullback on the S&P here, already have it. So there. So if we get this today, are we looking to trade that long now on the smaller time frame? So if that pulls back like this, are we looking to take that long on the smaller time frame? Yes, Ricky, that would be a long-term CFD. Yes, both of them would be CFD. Because you're trading the Nasdaq, the S&P, and the Nasdaq, it's always a CFD. You would have to go to the SPY or the QQQ to actually trade it. Perfect. So most people are saying no. So no, not at the minute. Now, potentially jumping down to the smaller time frames, but for me, we're overextended here, and it's not a perfect trade. Now, remember we just said on the Nasdaq that if we get a 1 bar pullback, we'd have to drop to the smaller time frame, but we actually had one here. It's the exact same happens here. So if we look at this, we actually had one red bar. Look, it came down and it touched this floor. Did anyone actually take that long on the likes of the S&P here? So the idea would be is we take it entry there above that bar and stop loss below that bar there, somewhere around there. That would be the idea. Now, is that a correct trade for me? All I'll do is I'll put it the tool here. Is that a correct trade for me? No, it's not a correct trade. We shouldn't be taking this. We shouldn't be taking this on a daily chart. Why? Because it's overextended. If we're going to take it, we're going to take it on the smaller time frame. So there's that trade. So if you'd have taken that trade at the minute, you would probably be 0.75% up. You took it at the beginning of October. Well on, Nigel. Good trade. I would be holding on to that long term. So at the minute we have this. So anyone that took that, it is 0.78. So we're looking at 3 7s is 21. So 2.1. So about 2.2, we'll say. So there would be our take profit. There's the 1%. There's a 3% gains. All right. So that's what we're looking for. But this is not a trade that we should be taking. Why? Because this bar is too big. The risk to reward has gone too far. So we're hoping that when we drop down to the smaller time frame here, that we get nice price action, a nice price action bar. That'd be really nice if we can get it. Let's see if the market gives it to us. Doesn't always. So we can see here the daily trade. Okay, I'm going to minimize that there a little bit, bring it across. So we can see this here. I'm going to put that in. So that was the trade that we placed. So that was the trade we placed. So stop loss there, entry here, and it's now up there. So if we look at the break and retest, there's the retest. That there. So we had this sell-off bar. So this big sell-off bar, and then we had this little small inside bar. Is that something you guys would trade? You have the horizontal level here. It's gone up, it's hit its head, it's broke, it's now retested. You have a big selling bar, and then you have a little inside bar right there. So is that something that we would look to trade right there? Jay, yep. I already in my head, I have people who will say yes. And I already in my head have the people who will say no. But that there looks like a really decent trade. Now, the problem with trading the likes of this is where does our stop loss go? Where does our stop loss go? So we're looking for this we're looking at the end of phase 2. We're anticipating why this trade is here is we're anticipating that this level. So remember from the daily chart. So if I zoom out here, look at that level, look at the touch here, bounce, 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 and then retest. When it breaks through it and then touches, that's called a retest. So we've 1, 2, 3 touches on it. So that's where that level has come from. Anyone who is trying to work out where it's come from. So then where does our stop loss go? So does our stop loss go here, just under the level? Does it go underneath this wick? Does it go underneath this wick? And that's the question. That's a $64 million question when we're trading. Where does our stop loss go? Now, for me, it has to go. For me, it has to go a minimum underneath there. Minimum has to go underneath there. If you want to be a little bit conservative, you put it underneath that one there. If you want to make sure you don't get stopped out, or if you do get stopped out, the market has completely turned, is there. But then on each of those, the risk to reward changes. So just assume you're a greedy little bugger. So remember, the entry will be above that bar there. So assume you're a greedy little bugger and your entry's there and your stop loss is here. And what we're doing is we're now looking for the market to turn. I'm going to get this here, long position, entry right there. I'm going to move my stop loss up if it'll let me. I won't. Move my stop loss up to the blue line. So I'm going to bring it across. Try not to move it. So we're bringing it across. Now, if I put my thing here, 0.4, so 3 4s are 12. So if I move that up to 1.2, And look, you potentially have hit profit on this already. So there's my stop loss and there's my take profit. Potentially you've hit profit already, depending on the spread. Okay, look at the high of that. It's a fraction higher than this. So we're now going to bring this down to the second one, down to there. I'll bring it down a little further. So there's a stop loss, and it is 6.6. That's 1.8. I want to make it 1.9 because there's a little bit to it as well. So there's our take profit in this one. It's a little bit lower than the daily trade. But see the difference in where our stop losses go. Distance this trade has to move for us to hit profit. Okay, and then if we go down to the last one, which is down here, the safe one, and a fraction more. So this is 98. So there. And this is why stop loss placement is so important. It's absolutely key. Now, one is that we have the risk to reward. Two, that we're finding these levels. And then three, that we're making enough money in the next phase one. Okay, that the phase one. Now, out of the three of these, I would be looking to put my stop loss here. Why would I be looking to put my stop loss there? Because we are late in this phase one. I want to get a really small risk to reward on this. Now, when I say small, I mean the distance. I'm still risking the same amount of money as I would on every single trade. So I'm still risking 1% of my accounts here. I'm not risking any more or any less than I would on a normal trade, but I'm still risking 1% here. And the idea is for it to hit profit already, hit my 3-to-1, or I par close the position, or I let it run. And that's the idea behind that. Whereas if I was early in the phase, if this was early phase one, and I wasn't overextended, and this was the beginning of the move, I might actually put a little bit bigger stop loss because I know that we could have a month of a phase. Because generally when these indices run, they run for a month or two. Like Nigel said, he got in there on the 1st of October. So which means he's in that trade now a month and it's just continued to run lovely. So that's the difference. We're looking to try get in these correct areas. And depending on where the trade is on a particular phase dictates where we should be putting our stop loss. So you're in it now with a trailing stop loss. Very good. Well done. That's the idea behind it. Trail that stop loss at a percentage behind it and just, yeah. And if it gets you an extra 2 or 3%, happy days. I like trailing stop losses. I do too sometimes. But if I'm, again, early in the phase one, I may put my stop loss there just to assume that we don't get stopped out. Anyone who took the trade on Morgan Stanley, we actually took the Morgan Stanley trade, and I put an extra bit on the stop loss because I was looking for the trade to run a little bit. I was just making sure, and as it worked out in our favor, and then it's now gone on to a 6 or 7-to-1. Bring that down to 1%. So there, perfect. So we've hit profit on this already with our stop loss there. What sort of leverage am I using? So people ask me all the time, what sort of leverage am I using? As much as possible. As much as possible. Now I can't open eToro at the minute because in Turkey, eToro is blocked. Probably because it's an Israeli company. But again, I use as much leverage as possible. Now people go, isn't that dangerous? Well, my entry is at this level and my stop loss is here. So it doesn't matter whether I'm risking 1 to 1. I'm still risking 100 quid in there. It doesn't matter whether I'm using 1,000 to 1. I'm still risking 100 quid in there. That distance is still 100 quid. I'm not risking any more or any less per trade than I would whether I'm using risk 1, X10, X20, X100. It makes no difference whatsoever. The thing that we have to work out is where's our stop loss, our entry, and our take profit going. Let me see if Naga will open up here. Well, it's doing better than eToro. eToro doesn't come up at all because it's blocked. Perfect. So come on. Okay, so pull up a CFD chart here and clear all the drawings. Change this to a daily chart. Now, when we're trading on Naga, you have to work out which one it is. Now, when I put in Apple here, you have two. You have CFD and you have real stock. So make sure you're using the right one. Yeah, you have to use a VPN to open Naga. Because I'm away for a week, because I have it on my phone, I'm okay. I don't really need it. But make sure you check whichever one you're working, whether it's a CFD or whether it's the real stock. Now, it'll say RE if it's real. Anything other than RE is a CFD when you're trading with Naga. So this is now, I pulled up the CFD trade. Now, what I'm going to do is I'm going to pop in two horizontal levels, say one there and another one here. So pop the other one in there. We'll actually pull that one down a fraction. So there's my trading parameters. Now I haven't done anything. This is not a trade. This is just a mock trade that we're looking at. This is a mock trade that we're looking at. So we're looking to buy this. I'm expecting this to go up. So my entry is 151 and my stop loss is at 146 quid. Right, so there's my entry, there's my stop loss. So first things first, I'm pressing the long button, okay, because I'm buying it. Secondly, I'm putting in here look, I'm putting in a specific rate. I'm not buying at current price because I want to get in at 151. So at a specific rate. So I'm putting in here 151, 151.00. So this is not a trade. 151.00. So this is not a trade. This is just a mock trade that we're looking at. Next thing I need to do is I need to activate the stop losses here. Okay, so I've activated my stop loss. See, it's hot. It's grayed out. You have to click on it and activate it if you want to use it. Because as a general rule with stocks, people don't use a stop loss or a take profit. But when we're trading CFDs, we have to. So I've activated my stop loss here. And if I click on stop loss, look, it says here 136. So eToro automatically has my stop loss at 136. I don't want that. Okay, so I'm clicking on specific rate. So I want my stop loss at 146.24. So now look, it says minus 69 quid. Now, don't know whether anyone noticed, I have 5 grand in the accounts here. So what's 1% of 5 grand? 50 quid. All right, so we're going to use 50 quid's money. So that says 69 here. So what most people will do is they will go to amount and then they'll change this now to 50 quid. I'll change that to 50. Now, if I change that specific rate, it now means that a stop loss is at 147. But that's not where I want my stop loss. I've now changed my stop loss. Never, ever change your stop loss. So I need to change that back. So my stop loss wants to be at 146.24. Come on. 146.24. That's where I want my stop loss. So how do I get this down to 50 quid? See this section here where it says investment or lot sizes really makes no difference. So we're using 20 lots in this one. Goes to investment. I click on the minus button down till it gets as close to 50 quid as possible. So now I have two options, 48 or 52. Now, unlike Naga, I can't edit this. Why? Because it's done in lot sizes. Okay, so it has to be either between the lot sizes. So I can't actually change it down a little bit further. So in my position, this would be 48 quid investment. And then I'd put in my take profit if I was doing it, which would be 3 times this, which would be 150 quid. So if I go to there, and in this one, I can actually click on amount. I don't need, for this one, it's going to be 150 quid, which I already have there. Perfect. So it's already set up. And that's how you would place a trade. So again, leverage is irrelevant. Okay. This is a CFD. This has standard leverage. And most brokers give you standard leverage. I think this one, I actually don't know because I'm speculating. So they generally give you standard leverage. With FX, it's standard between 20 and 30x. Stocks is between 5 and 20 as far as I know as well, a leverage. But leverage is irrelevant. We have a stop loss and we have an entry. And then what we do is we put the amount of money we want to risk between those two lines. Now, am I placing that trade? Absolutely not. That's not a trade. That was a mock thing that we're working there because people ask me all the time about leverage. Isn't leverage trading with leverage? Isn't it dangerous? No, you're the one that's dangerous because you have no idea what you're doing. You have no idea what you're doing, and that's the problem. Is people trade without knowing what they should be doing. Okay. Then we go back here. So that's the idea. So that's exactly what we're looking for on the likes of the Nasdaq. So if I pull that over, that's exactly what we're looking for on the Nasdaq. The Nasdaq comes over here. We want that to come over and we wanted to come back down and touch this level. That's what we're wanting to come down, touch a level here and then take off. And then the last one is the Dow. I'm going to change that back to the daily chart. And go and zoom out. Okay. Now the Dow is generally a little bit doesn't move as much as the other two. Doesn't move as much as the other two. So I get that and pop it in here. But there is another level fraction lower, which is here, which is a 9. So we have a little zone rather than a level. So when they're that close together, it's called a zone. So that's the next area. That's the next area for me. But for me, we have to look at what the Nasdaq and the S&P are doing before I trade the US 30 or the Dow, Wall Street. So I have to make sure and have a look at what the Nasdaq and the S&P are doing before I'm looking to trade that. Someone said, is it time to consider shorting Tesla? Well, let's have a quick look and we'll take everyone's assessment on it. Oh. So looking at this, madman. Do we think that this is a point where we should start shorting Tesla? I hope so. But again, remember, to short the market, we need a horizontal level. We need divergence. We need stuff like that to tell us that this is a place where we should short. So in my opinion, under no circumstances should we be longing or shorting Tesla. This is not the area where we should be doing any of those. Again, also, with the hype that's around Tesla at the minute, not unless you can stop Elon communicating. Well, see the thing about it also is that there's so much hype about Tesla at the moment. It's the most traded stock in the world. So there's so much hype about it. It is running, and once you see these bars here running along, what is the retail trader going to do? I'm not talking about the investment traders. What's the retail traders going to do? Buy. Now, I actually wouldn't class you guys as retail traders anymore. I would class you as sort of investors. I wouldn't class you guys as retail. I understand that you guys are, but you guys would be a little more institutionalized now from the likes of the education, the likes of the materials that you read. Whereas I'm talking about the retail traders, of people who have no idea what's going on. They've just heard that Tesla's gone to the moon, and all of a sudden they just jump in on board, and they're looking for a quick buck. In the chat room, in the chat groups, how many times have people posted up, yeah, I made some money on Tesla today. I made some money on Tesla today. That's fine when it's going up, but wait till it starts dropping. So how many people lost money on Tesla today because of the gap? How many jumped in here near the top of this and then a gap down here and they lost money? So that's the problem with this. This is not something that I'm looking at the moment. Remember we talk about early and late phases. So are we early or are we late at the moment? And there is early. So this is late and that is early. Now, what I want to do is clarify. So from here to there is early phase one. Now, where we're basing that is, see this phase two here, back down to there or down to there, either or, any of them. So anything inside this line here, anything inside that line is early phase one. Anything above this line is late. So it's not something that I'm invested in, anything outside that previous high. So what we need is for this to come back the whole way down to this level. And then if it comes back down to this floor, that's where I'm looking to trade it. That's where I'm looking to get in. That's what I'm looking to do on Tesla. But at the moment, absolutely not. Absolutely not. This is not something that I'm looking to trade. And under no circumstances would I be looking to jump in on this at all. Absolutely not. I wouldn't be looking to buy it, or I would not be looking to sell it. Now, my thing is, I want that to come back to this level. All right. But with the demand, with the likes of demand, with the likes of the amounts of publicity that Tesla's getting at the moment, imagine we had this happened here. So we had a red bar here. Then we had another red bar. And then we had another red bar. Now, do we think that would continue? Or do we think then around this point, we would see an influx of buyers come back in now again? If that did happen. So do you think that if that did happen, it would come the whole way back down this level? Or do you think that would give the buyers more momentum to jump back in? Only squid coins get more attention than Tesla. Uh, and that is the problem with the likes of this at the moment is I do not think it will come back to that level. I think it'll come back down and then take off, and it may go sideways for a little while. I don't envision it coming back that far, but who knows? I would probably get involved in there and then wonder why I'm losing money. But again, it's just one of those things that's what happens is for me, it has to come back to that area before I'm looking to buy it again. It has to give me a good setup, and then I'm in the market. But at this particular point, no. Why? Because I can't guarantee that's the place is going to turn. Now, if you look at this and see it here, and you want to jump in and you want to be part of Tesla, you then buy the underlying asset. You do not trade this as a CFD. This is an underlying asset. Carol, I agree with you. He will dense, but the problem is that Elon cannot tweet about Tesla. The SEC has already investigated him once about it, and he was suspended as CEO because of it. So the SEC do watch him with Tesla massively. The problem is with cryptocurrencies, there's no what they call it, there's no regulation. So when he tweets about Tesla, he has to keep it within regulatory parameters. But again, Gary, no idea. Bear with me. So Gary has said, I noticed that I can't set an order on Sloan. No option. I can do it on other crypto. Well, maybe because eToro are trying to take out now you can't buy it or you can't place an order. So I'm just assuming that by why you say an order that you can't place an order. Maybe that eToro are trying to limit the slippage and limit the potential tickets that they get because people weren't filled at a particular point. So they've stopped orders because Sloan is moving fast. It's the same with Shiba; they're moving. So that's why. That's probably why they have taken that off. But or I'm only speculating. I don't have the inner Shiba can place an order. I don't know then. I don't know. It's a strange one. I could not tell you is the actual honest answer. Henry, can you look at natural gas and coca? Let's have a look here. I want to clear all that. It's annoying now because I don't generally use coca and stuff on the likes of this chart. Coca futures. Tell me if this chart looks correct with coca, guys. Tell me if this looks similar to coca. Yep, cool. Okay. Sometimes there's so many of them. Sometimes you just have to check. Yes, thank you. Is there a trade here at the moment? For me, no, absolutely not. Absolutely not. Yes, we have a level here. Yeah, there's a level. I can see that. I can see that as 1, 2, 3. For me, there's more momentum to the downside than the upside here. Check out the seasonality calendar as well. See if there's any seasonal on this, but no, for me, there's better trades in this. There's much better stuff than this. Get something that's trending. Get something that's trending. Natural gas. Again, with the likes of this, we are starting to stutter. We're starting to slow down here. I know we got triggered out of Gazprom, okay, which was massively annoying. So we had a loss on that, and we only barely got triggered out of it. But we've had a lower high here. Yes, this low is higher, but it's almost come back down to a double bottom. So it's again not massively jumping out of me. Technically, yes, there's a trade there. We could class this as a double bottom, but the bottom of the candle there and the bottom of the wick are in the same level. So yes, you could class that as a double bottom and expect it to go up there. But for me, it's not clean enough, and I wouldn't be taking that as a trade. But there is one there. For me, this is a better trade. Natural gas is a better trade than the likes of coca. But would I place my hard-earned money on either of those trades? No, not at all. Not at all. Copper. Copper. Again, does that look like what the copper chart looks like, guys? I'll pick the right one. C. Good. Let me look at that. We have that level from back here. But again, for me, it's gone so messy. It's gone so messy. We had such a lovely run on copper. It was great. So for me, this is again not a trade that I'm looking at. It's not something I'm looking at. We had a really good run on this. Don't be using sentimental on us on the likes of this. So for me, no. The next trade on this has to be at this level. This one down here. That is the area for me to have a look at this. Is down here. So it's not a trade for me. Silver, do I have silver on this one? Kathy, look, you could get a bounce there. Is that the strongest level in the world? There's a touch here, a touch there, breaks. You could argue potential touch there, break, touch there, break, touch, break, and now we're touching again. So yes, there is a trade there, but would I put my money on it? Would I expect you guys to put your money on it? No. But if you want to have a bit of a flutter, by all means, that this could be a really good trade. It may well go off and run the whole way to the high up here again, but it's not for me. Absolutely, Alex. You could see that as a zone rather than a level. You literally could actually have that down there to as the 4.25. Alex, did I sent you an email yesterday or the day before? Can you reach out to me on Discord, please? Now that you're there, saves me emailing you again. So yeah, for me, this is pretty sideways and not something I'm looking at. Someone asked for silver. Okay, so silver had a really nice double top here. Off that bounce, we had a big high test bar, which was huge, but then we had a smaller inside bar on this. The overall momentum was going down, and we were looking on a little bit of dollar strength, which means that this was a little bit weaker. Can I please look at Twitter? Why did Elon tweet or something? Crack myself up. So here was the original trade setup that we talked about. Funny ginger man. Funny looking, you mean? So there's the entry. There was a stop loss. 3.4, 12, 12, 13, 2. So that would be the 3-to-1 risk reward on that bar there. Now, for me, we definitely are not having. I would not be in this trade below this point. Absolutely not. That is a floor. So any take profit I have would have to be inside that. But what happened then is, see the next green bar? My entry would have changed on that. So my entry, where I would have updated that trade. So my entry would have been now on the inside of that bar. So see that last green bar? And my stop loss could now come down a little bit. So I would have amended that after day 2. So I know this was something you guys were chatting on the group again. And this is 2.5. So 7.5. So there, and that makes a huge difference to us on this particular trade. So how many people took that trade there? Silver short, double top, overall momentum is going down. We were looking for we're looking for golds to get our dollar to get a little bit stronger, which meant gold and silver got a little bit weaker. It has moved nicely in our direction. Today's had a pretty big sell-off. Now, the problem with this is with the way dollar is moving quickly up and down, is this going to be a long-term trade, or are we better off trailing our stop on this? Right, I'll run through the last couple that you've just said here. So oil and Twitter, they're the two I'm going to quickly run through. Now, for me, there's very little to go through on oil here. It has to have a phase 2. I'm not this for me is not a phase 2. Ideally, I would want it to come back into that area there. But I know historically there are other levels. So I know historically there are other horizontal levels, but for me, that is not a phase 2. If it continues, you can trade it on the smaller time frames, but not for me at the moment. I need it to come back down. I need to come back down to a substantial area before I'm looking to trade it. And then Twitter. Twitter's earnings. Oh, that didn't go well, did it? Okay, so for me, come back into this area here. Let me see. Looks like a half decent area or even a fraction lower. Or a fraction lower. Somewhere around there. Either of those, either of that. We have a little bit of a zone there, a couple of bucks. A zone there of a quid. Okay. So I'm going to divide both of them up there. So that's where I would be looking to, if I was looking to buy that, waiting for that to come down to. So for me, it has to come back down to this area for me to look to buy it if we're interested in it. But again, it had bad earnings or earnings that came in directly on or slightly below. So it's not something, it's not something I'd be looking to trade. I wanted to come down a little bit further, come down to that area, and then I would have a look at it. Okay, everyone, it's been an absolute pleasure. Thank you very much. Anyone who is on any of YouTube or anything like that, make sure you click like and make sure you follow. And then any updates, I do trades during the week. And anyone who wants to jump in on my subscription service, let me know or reach out to me, and then we can go from there. Alex, make sure and give me a Discord chat, please. Thanks, everyone. Bye-bye.